Hey everybody, my name is Shane Pinnock. I run the events over at 10 Capital Network. Today we have a great event for you today. It's our 10 Capital Quick Pitch for the month. And during the session, anytime if you're in our audience, just please, if you have any questions, feel free to drop them in the chat and we'll try to get to them as best as we can with the time we have allotted. With that, I'm going to kind of introduce our panel here. We have Ben Rifkin. Ben, do you want to tell us a little bit more about yourself and what you do?
Sure. Hey, everybody, great to be here. As Shane said, my name is Ben Rifkin. I manage a single family office based in Park City, Utah, and I'm based here as well. Most of my career I've been spending on the operating side and recently transitioned over to the investor side about 8 years ago at 1080 Capital, which is the name of the single family office, no relation to 10 Network. We focus on venture and other alternative investments.
Great, thank you, Ben. Next, we have Dan Ballin. You want to go ahead and give us a little bit more about yourself?
Yeah, I'm Dan, as Shane says. I've been working now with tech startups for 20 years, exited founder myself. Typically, we've started life out in the world of corporate innovation, scouting for startups out in Silicon Valley, Hong Kong, Israel, running an accelerator out in London, and getting them ready for and launching new ventures for the likes of Coca-Cola and British Airways and big FTSE and NASDAQ brands before transitioning across over to the world of investment for startups where I run my own business, where securing finance for startups with angels and syndicates and VCs. And we've been doing that for about 5 years and advising them as such. I'm over out in London, so we've got we've got to work with startups all around the world. We've got a strong, good European focus as well. So for those corporates startups looking out to get a good presence out in Europe, we can support you with that as well.
Great, thank you for that introduction. And then our honorary member of the panel today, Hall, if you want to jump up here as well and give a brief introduction. This is our CEO, Hall.
Thanks, Shane. Yes, I'm Hall Martin. I'm the founder of 10 Capital, where we have a series of syndicates and angel network connections that we use to fund startups. And we're looking forward to the presentations today. Thanks.
Great, thank you, Hall. And with that, I'm going to bring up our first company to pitch. Mark from Fabulingua, if you're ready, have you on the list first.
Well, hi, everybody. My name is Mark Beggart. I'm the CEO and co-founder of Fabulingua. My background is I started out in finance. I've been in tech for the last 20 years. I took a company public, a wireless interactive entertainment company that we built up in Shanghai, China. Took it public on the NASDAQ. That's my most relevant experience to what we're building here at Fabulingua. I love languages so much. I married a polyglot, and together, when we had our children, we were looking for solutions for ways to bring language into our home for kids, our children, and just couldn't find anything that was relevant or was put our kids on a path to fluency. Most of it was extremely token, flashcard-based rote memorization learning. So we decided with her background, being from in linguistics, social anthropology, to build a product that's based on story-based learning, which is how we taught our kids. And we wrapped it in essentially sort of a game design. I mean, we believe strongly in the convergence of education and gaming. That traditional education, industrialized education, is lacking the kind of engagement and the kind of involvement the kids need now, particularly with the technology, which affords us an opportunity to provide just a much more interesting, immersive, engaging experience, which buoys learning, particularly for young kids. The model that we're going to market with our language learning product is teacher-led adoption leads to sort of parent monetization model. And this model has been very successful for a couple of other ed tech K-12 companies, Math Game Prodigy, another reading game, Epic. Both of these have 9-figure outcomes and billion-dollar valuations, certainly in the form of Prodigy. We're doing the same thing for Fabulingua. And essentially what that means is that we provide essentially a freemium platform for teachers to be able to, and these are teachers, tutors, homeschoolers, be able to essentially administer our product, our game, our stories with the kids. And the kids in turn get engaged in the story because it is focused around game design, and ultimately that leads to parents wanting to have the fullest, rich experience and willingness to pay for a subscription to the full library of content or the full game experience. About our market, there are 2 billion people currently learning a new language in the world, and it's growing particularly because of the digital transformation of language learning from offline to online. There's a huge market for kids that is really being overlooked and underserved. Most of what we hear about progress in terms of language learning in a digital format is focused on adults, and we think that the kids market is arguably larger. And language teachers really are still using 40-year-old content, and they're frustrated and they're having a hard time finding the kind of content curriculum that work, oftentimes reaching into their own pockets. Fabulingua is a play-to-learn mobile game for kids. We have just been issued a patent on our story-based method, which basically creates a scenario in which kids can understand languages that through a game and through stories that we built sort of ourselves, and it allows us to really differentiate ourselves in the market. We have built the product such that we can scale and reskin it into multiple different languages, the stories, the game design, etc. Our wow factor is we've won several awards for our product, and it's science-backed language learning. How does it work? Kids play a new game and they're rewarded as they read and interact with animated stories. It's a B2B2C model that I mentioned earlier. And our content creators essentially share revenue with us as the product is used and as the subscription, essentially in a Spotify type model. Our magical translations learning system, which we have a patent on, uses natural language immersion and comprehensible input, and we supercharge it with literacy. With less than $100,000 of advertising to date on our MVP, we've had over 100,000 downloads. We have a really above market average trial starts and subscription rates. We have more than 700 teachers on our waiting list for the new module that's going to help them to administer it with class, be able to sort of sign up kids, to be able to create assignments, and then to track progress. This teacher platform is a real critical part of our go-to-market. It's going to have easy onboarding and going to be really low friction, and create sort of a two-sided platform network, because these teachers can not only use it in class, but then they can also use it to become tutors. The teachers are essentially the model, and the unit economics are very compelling here. You can see, because essentially by reaching a teacher, you're reaching 40 students or plus. So the conversion of a small portion of that through the teacher gives you great lifetime value over your customer acquisition costs. Our plan is to scale into multiple languages over the next 3 to 5 years, moving into Asian markets by year 3, and then ultimately being in 10 plus languages by year 5. Over the next 12 to 18 months.
You've hit your 5 minutes. Just want to, before we keep going, if we can move into our panelist Q&A.
Sure.
We'll open it up. Like I was saying to y'all earlier, if we have time at the end, we can circle back and answer more questions. But yeah, and with that,
sure. No, I'm essentially finished. No problem. No problem.
Great.
Go ahead.
So yeah, our panelists, you have 3 minutes to ask any questions, and yeah.
I go first?
Yeah, go ahead.
Yeah, so your time got gobbled up pretty quickly, actually, in the beginning. Tech problems, something you might want to think about sorting out in advance. It doesn't get lost on investors. It's something maybe you can prepare for in advance. But overall, this is, to me, a large market. It's a large market, and to me, an attractive market. But there's some big brands in it already occupying this space. You can already purchase games in this. You need to bring out pretty early that messaging on why you're different. Actually pulling out the pattern story, bringing it forward might be a little bit better in my view. So I just think you want to work on that story, I think. I sometimes wonder mentioning 2 billion, because once you start talking about billions, it's a bit lost on people in terms of how many people are learning a language. Maybe what that means in dollars would be quite interesting, because in terms of the scale, but just some initial, thoughts on that would be quite good.
Yeah, thanks, Dan. Yeah, 120 billion is what it means in terms of dollars.
Right. So investors are looking for large scalable markets at the end of the day. And some idea of that and what you maybe can penetrate in that would be quite good. I like the idea of the Spotify model. I think that's kind of, it sounds interesting. All that kind of all came to the end. You want to capture people's, at the stage where you are on the amount of money you're probably going to be looking for, which we never got to because you missed them. We didn't get that far. I suspect a little bit more around that business model and how that's going to work and your partnerships that you've got in place to be able to engage those teachers, those channel partnerships and stuff is something I would, I think we all understand education and language is something that's important. Best of luck, investors. Given the right story, made it exciting enough, we'll want more, but he needs some work.
Yep.
Trying to be encouraging, but equally.
No, I appreciate it. I appreciate it. Thanks, Dan.
Mark, I like your concept, and it sounds like you have some good traction early on. And I appreciate the going direct to teachers rather than going through the school pathway or going direct to consumer. I think those are both more expensive, and especially on the school side, a longer purchase cycle. But what's the go-to-market strategy for the teachers? How are you going to get teachers onto the platform?
Teachers are a community that spends a lot of times sort of essentially sharing information together. So there's many platforms, not just your classic social digital platforms, but also other areas in which we feel like we can reach teachers specific to the subject matter in which they're interested in language learning. So when we, for example, got our 700 teachers on board, that was essentially sort of Instagram and Facebook, which was simple, but we were going to the specific groups in which they are spending time and sharing information. And the other thing is that a lot of the teachers that we've had contact us and ask for this product for their kids have actually heard from other teachers. So there's sort of a viral component to it as well. But we just need to get that sort of flywheel going with teachers, and we believe that there's an opportunity for them to share more information.
Great. Yeah, that'll be all the time right now we have for Q&A. Again, just reiterating, we will probably have time at the end for some more. But yeah, thank you so much, Mark. Great presentation. And we will be moving on to the next one. And if you can just unshare your screen.
Sure.
That would be great. Cool. And then, yeah, if you can turn your video and sound off as well, that would be awesome.
Mm-hmm.
All right, so next up we have Electric Playhouse. And before they get started, I just want to say that if anybody in the audience has any questions or anything, please feel free to drop them in the chat. And if we have time, we will get to them. Also, if anybody in the audience is interested in learning more about any of our companies, you can always reach out to us at 10capital.group, and we can connect you as best we can with them. And with that, we can go ahead and get started.
Okay, I'm ready. Hi guys, my name's Brandon Garrett. I'm the CEO and co-founder of Electric Playhouse. And Electric Playhouse, we're a location-based entertainment and platform company. We combine projection mapping and sensors to track your movement to basically gamify the built-in environment. So we turn the walls and floors into interactive surfaces, so no headsets required. And this allows really for all ages to participate. Our platform is composed of a kit of parts and a media library, and that library consists of interactive games, art, dining pieces. All of that's built in-house now, but we've built a platform to allow outside artists to also contribute to that, to expand our library. And we see big opportunities with licensed content with Disney, Universal, and turning those into interactive experiences. All of that content is piped into what we call our kit of parts, which are basically different game areas, and they range from 40 players, that's about 2,000 square feet, to small individual and small group experiences, which are about 150 square feet. All of those little kits of parts actually take on different forms and applications. Our current form factor is a flagship location in a 24,000 square foot facility in Albuquerque, but we're exploring several other form factors such as malls, museums. We're doing a traveling exhibit right now, And it's essentially taking those kit parts. And so all content and games is distributed in multiple ways, which brings different forms of revenue to the Playhouse. Looking forward, we see a big opportunity to connect to the metaverse, where basically digital currency or digital rewards, for example, if you get a high score, we could have digital flames follow you throughout the building. And so you can start to bridge those two realities. And so we see lots of opportunity there. And I'm going to show a quick 30-second video because you really got to see it to understand what's happening. Within here, you'll see a lot of games, all ages, kids playing, and you'll notice the floors and walls are all interactive. And so here's some of the play. We also do immersive dining. So that's a quick snapshot of some of the stuff that we're doing. It's immersive dining, games, entertainment, and we can white label the whole building. And I think our big competitive advantage is that we are digital. And so we can change content by time of day and the activity. So early mornings, fitness, daytime education, afternoon, gameplay, even late night is concerts, 21 and over events, and immersive dining. When we look at the others, everything else is pretty static. You go there, it is what it is. At the Playhouse, you could come back again and again, and it can be a completely different experience. You know, being a digital platform, we're basically see ourselves as the TV, as the built environment. You know, it's the next media platform, so it spans several markets. And we have been successful at really capturing our core millennial families, leaning heavily on the female side. And so that's a key demographic as we look to expand to different vacant locations throughout the country. We are a team of architects, engineers, software developers, operators that have combined, and we've been running since about 2020, so the past 2 years. And in terms of growth and projections, you know, we see the company being profitable in 2024. It basically needs 2 locations to get to break even. And from there, it's rapidly scalable. And so that module can fit into just any type of space, and we're finding opportunities weekly. Some big momentum factors. We just brought on new board advisor, Craig Kornblauer, who's the president of Universal and was a Disney exec for several years. And we also had great precedent with Dave & Buster's buying Main Event, a private company with about 50 locations for $835 million. Our strategy this year is to build and kick off location 2, which will be in Houston. And this week, our team is actually in Boston selling Electric Playhouse Travels, which is a small form factor of the games. What we're looking for to get to location 2 is basically a $3.5 million raise at corporate through a convertible note.
Great. I actually stopped your time a little early there. So we have about 3 minutes and 45 seconds for Q&A. And whoever wants to start that off can jump at it.
You can go again first if you want, Shane.
Sure.
First of all, a nice pitch, by the way. Really enjoyed it. Nice narrative, nice story. Really great pitch. Nice to see you've got some early traction there as well. And I think what your ask is you know, makes sense. It's not too shabby, not too greedy either. Who is owning who is creating and owning the content? Does that presumably the expense here at the end of the day?
We have an in-house content development team that's creating content. And then when we allow others to build, we do some type of revenue share, or we'll buy the content outright.
And what's stopping you doing 2 locations any quicker?
Just right now we're doing a larger location. So we're doing a 24,000. It's really just the lease negotiations and finding the right spots. But we are in talks with Simon Malls to do small form factor, which would just take a different kit of parts and allow us to scale really quickly. The flagship locations do have a restaurant component, but other form factors don't need that.
Cool. All right. Okay. Thanks.
Brandon, what does it take to develop the content in such a way that can be interactive in a large space? Like, I guess I'm looking at time and cost.
Yeah, so the larger spaces we've consolidated, we use 2 LiDAR sensors that map the entire surface. And then in terms of the games, we can be very agile in the development. Some of the games can be developed in 2 weeks. Some of the more intricate ones may take 3 to 4 weeks.
Okay. And as you look down the road, kind of the future of the company, do you see yourself more fully owning and operating every location that you're in, or is more of the revenue weighted by partnerships and other licensing deals?
We see us owning a majority of the content, but we do see big opportunity where people like Disney and Universal have this huge catalog of IP that's sitting on a shelf collecting dust. And we can bring new life to those experiences and bring those into the, different form factors. So if it's a mall across the country, that's maybe a smaller version than our flagships. They're all just different opportunities using the same content.
Thanks. One more question, I guess. How many people are on the team right now? Is it just sort of that slate that you showed us before, or is it a broader team?
Yeah, we have a broader team. We have about 12 people on the team right now, and about half of them are other co-founders, software developers, and artists that build the content, and the other half is more of an operating team. And we also use a MR Pro Fund as a consultant. That's a Disney operations consultancy in terms of scaling and managing the units.
Just quick
Do you
question.
have any idea? Go ahead, Dan.
Just a quick question from me. Given you're doing so many different kinds of things with this, which in many ways is great with these, how are you going to market this? Because you're dealing with all ages and different groups and stuff. So I just can see me turning up, and one day it's being used for yoga, and next minute for an art exhibition, and I'm going to be,
Yeah, that's a great question, because you kind of can do it all, and we hit every demographic and age. And so we tend to rely heavily on social media because you can cater the audience. And also running campaigns we're about to launch is an Active Days Electric Nights that starts to change the idea for programming. So people know it's more games, fitness, education activities in the day versus a nightlife with concerts and fine dining at night.
Great. Yeah, that'll conclude our questions for now. Thank you so much, Brandon, and move on to the next
opportunity.
Yeah, of course. Yep, Cal's already here with welcome, Cal. Whenever you're ready. Did you have slides? There you
Just
go.
have one slide. I'm not going to go through all of the slides that I have, just one right now. Thank you.
Great. Yeah, whenever you're ready.
Sure. Thank you. Thank you, Shane. And hello, everyone. My name is Cal Shelby. I'm the founder and CEO of With. I'm also the father of 4 daughters who graduated from major universities. So like millions of parents, I had the so-called privilege of picking them up and dropping them off at the university. With is the only company in the world that has united 2 successful services. That is of rideshare, which is rides around campus, and carpooling long distance for travel when they travel during holidays, break, etc. We are exclusively for college students, faculty, and staff. Since I have a short time to gain your interest, I would like to let you know the main differentiating factors or competitive advantage that we have over Uber and Lyft. Number 1 is we are a closed loop system. What I mean by that is all of our drivers and all of our riders are fully vetted members of the university community, i.e. students, faculty, or staff. Second is our partnership with student organizations. Currently, we are at the University of Alabama, and we are working with the Student Government Association, the 4 councils that represent the fraternities and sororities, 66 fraternities and sororities, as well as other organizations. All of them have signed up to work with us. Every member of an organization can either be a driver or a rider for us. And by turning their membership into drivers or riders for us, organizations can realize a revenue sharing program with us. They can make anywhere from $5,000 to $20,000 per year. The other important aspect of the partnership is when we start to scale this to other universities. These partners, as an example, the Greek councils can reach out to their counterparts at a university that we say we're going to scale to, and they will let them know how much money they made with us. And so we can begin to recruit drivers and riders before we spend $1 of marketing money there. The other aspect that's important with this is what we call the sponsorship program that we will also work towards. They become our advocates to reach the administration. Right now at the University of Alabama, 59% of the student population is out-of-state students, and they are paying $3,000 per year for what they call transportation fees. The in-state students are paying $2,000. So through the sponsorship program, we will be looking for the organization to request the administration to give us $300 per student per semester. We would drop 60 rides for those students that they can utilize at any time of the day. And once they use that, then they start paying for that themselves. The third important differentiating factor between us and between Uber and Lyft is our pricing models. Currently, students at the University of Alabama are paying anywhere from $12 to $40, depending on distance, time of day, surge pricing, etc., all within a 3-mile radius within the campus that encompasses 97% of the dorms, as well as the housing units, as well as the campus itself and the business district. Later on, we will introduce subscription models, 4 days, 7-day, unlimited rides for a low price. The most important factor is the aspect of safety. I can't tell you the number of times that we've heard from university administrators, parents, as well as student organizations, especially the sororities, regarding safety and the apprehension of taking Uber and Lyft later on at night. Ben, I know at the University of Utah, I think it was last year that a girl actually died getting into an Uber car over there. So these are the stories that I think haunt a lot of the females. So I want to talk about the safety aspect of it from a rhetorical questions that I'd like to ask you guys. I want you to imagine if you are a parent of a college students, and if we would look at the carpool aspect of it. By the way, the market for carpool in the United States is around $4 billion. Why? Because there are potentially 50 million round trips that students take. That is just looking at major holidays and spring break and summer break. So after working all day, do you think a parent that has an energy to travel 270 miles to pick up and drop off their son and daughter, where did we get the 270 miles? The Pell Grant average distance from home to school is 135 miles each way. So under our app, the student can actually ride with a fellow student home. The parent can know through the app exactly who they're traveling with, as well as be able to see the car from the time it left the dorm until it got home. On the rideshare, the market potential there is $9 billion for us. I want you to imagine your son and daughter being, studying late at night in the library or at a friend's house or at a party. And now it's midnight, 1 o'clock, 2 o'clock, and they want to go home. Would you like them to walk home by themselves or call an Uber and Lyft where, again, there's a lot of apprehensions there, or ride with a fellow student that will pick them up and drop them off? I can tell you that there are 21 universities who have resoundingly answered those exact questions, and right now they are in our pipeline. And we have launched at the University of Alabama a 6-week program where we've had 20 drivers as well as 150 riders. We are ready to launch and expand the service during the summer in preparation for launching at the University of Alabama. Thank you, and I'll take some questions now.
Great, Kyle. Thank you. Yeah, let's open it up for questions now. We'll give you 3 minutes. Whoever wants to start.
Cal, my first question is just, I understand that there are elements of WIT that are, better, safer, more efficient than the dominant players in the space. But if I'm a, 17, 18, 19-year-old college student that's coming to a campus and have Uber and Lyft on my phone, and that's my experience, and I'm trusting them in my home location, how am I going to learn about WIT, and how am I going to decide to make that switch?
Yeah, that's a great question. And that's another aspect of the partnership with the student organizations. Working with the student government, they have already opened up the door for us to utilize their social media as well as all of their email system. All of the 4 councils that represent they're all saying that we will also allow you to use our social media feed, and they will begin talking. Especially when you're dealing with those students, one of the things that, throughout marketing is these students are more apt to have a buy-in if it's coming from a reputable source that they believe in, which is the leadership of their organizations.
And you didn't get there in the presentation, but what is your capital raise?
We are looking for
the milestones.
Sure. We have raised $312,000 from family and friends and $250,000 from 2 SAFE agreements. We're looking for a $2 million raise under SAFE or convertible notes.
At what kind of valuation is that?
Valuation of $10 million and with a 10% discount.
And And how are you going to get the volume of drivers here? Because this is really what make, you know, the likes of Uber works to before, you know, at the end of the day and stuff. They focused all their time on the driver side of the
Yeah.
network.
Thanks, Dan. At the University of Alabama, out of the 40,000 students there are 16,500 students with cars on campus. Basically, all those cars are sitting in parking lots collecting dust. So students at the university can actually drive for us. And this is another differentiating factor between us and between Uber. Right now, the minimum wage in Alabama is $7.25. We are starting drivers at $14 an hour with potential to make $20 an hour. So, you know, that is a very, very great price for students to be able to have a flexible schedule, work when they want to, et cetera, for us.
And how about, have you tested out with the students how they feel about them their privacy being tracked? Because the last thing I wanted when I was a student was my parents knowing where I was.
Yeah, I mean, the only way that the way that it happens with the carpool, Dan, is when students create a trip, the app will come back and ask a student, would you like to share, you know, like who's in the car with someone outside, a parent, friend, whoever they want to. It doesn't have to be a parent. And if they say yes, they give us a phone number and email, and we'll send exactly who's going to be in the car. With regards to the GPS, again, it comes and asks them the question if you'd like to share your geolocation with someone outside, and we'll send a link for them to sit there and follow. So really, it's in the students' hands to be able to allow that.
Okay, so the consent sits with the students.
Yes. Yes.
All right, and that'll conclude our questions. But thank you so much, Cal, and we'll move on to the next one. And so next we have Groundbreaker Technologies. So Jake, if you want to come on up here.
Okay, thank you. Hello, everybody. I'm Jake Marvelstein, the founder and CEO of Groundbreaker. So Groundbreaker helps early stage up and coming real estate deal sponsors compete with institutional commercial real estate investment firms. As a former analyst working at a REIT called Watermark Capital Partners, I had my firsthand experience trying to raise capital and manage investors. The process is very cumbersome and sucks out a lot of your time because of the many administrative tasks you're running in the background to keep your data accurate across the different systems. And the typical real estate investment firm uses Excel, email, PowerPoint. Maybe they use Dropbox and a CRM or email marketing tool where every bit of data is in different systems. So that makes it difficult to be on time with investor communications and professional when investors want to access information. Groundbreaker helps streamline the whole entire process of raising capital from investors and also managing the communications professionally by putting it in one tool where the person that's operating the fund can share the information with investors. They can log in real time, they can sign documents, they can fund transactions, and they can access all the reports and information in one place as opposed to getting lost through email. So it structures the workflow for the real estate investment firm, and it builds investor confidence, resulting in a better experience overall for both parties. And we save 80 hours per deal and about $5,000 in legal fees and bank transfers by allowing our customers to use the software versus having to hire somebody else in-house to be able to manage the workflow. And our typical process when we work with a customer is that we take all of their data from their existing tools, we put it into the platform, they can set up their deal, they onboard their investors, the investors log in, make their commitments, fund the deal, they close, and then the investors have their bank accounts hooked up to ACH, so the deal sponsor can send money out to investors through the software, and it gets into the investor's bank account, and then the process repeats again and again for every deal. Our long-term vision is to productize every piece of the real estate investment lifecycle so that a real estate deal sponsor who's up and coming and getting into the business can come to us with the ability to form their legal entity, find access to investors, get their debt and equity from us, find property insurance, and have the ability to get underwriting for their deal. And it's an enormous market. This is a $32 trillion global market $16 trillion in the United States. And the small segment that we go after is 3.2 trillion. Our software sells for $3,000 a year on average now. And so we're segmenting a $450 million market for the small and growing real estate syndicator. Our team is built by me having the real estate domain expertise. My head of product came over from BuzzFeed and Warby Parker. My head of sales and customer success worked at 2 previous startups where he built and scaled out the sales and customer success teams. And my head of growth has bootstrapped 3 previous SaaS startups to profitability. We've raised capital from family office, angel investment group, the VC arm of the National Association of Realtors, and 2 customers. Our business model is $3,000 a year for 2 administrative seats on the software. And as companies add another person to their team, they buy another seat for $1,000 a year, getting up to $15K. We're also piloting a financing partnership where if customers come to us with a deal that's on our platform and they wish to raise capital, we charge 1% for the debt, 2% for the equity, and we take 35 to 52.5% of the fees that our partner charges. On the platform so far, last year we did $1.2 million in contributions. We've done 700K in distributions to the platform last year as well. And this year it's already $600 million in contributions, $1.2 million in contributions last year. This year, 600 million, and then almost 200 million in distributions so far this year. We have 140 customers right now with 400K in ARR. We're scaling to be at $2 million ARR in 24 months and around 500 customers. During that period, we will hit the break-even mark towards the end of that 24-month stretch.
Jake, I'm going to cut you off there. You're at your 5 minutes.
Okay.
Yeah, sorry about that. We can open it up for questions now. So again, whoever's ready, I'll go ahead and start the 3 minutes.
I can go ahead. I'm keen to understand about your competition because I know you've got some active competition in the space.
Yeah, absolutely. I have a slide for that. Thanks. So Groundbreaker is segmented at this early stage up and coming real estate syndicator and small team, whereas there are other competitors in the space, but they're much more focused on enterprise and middle market firms that are already pretty well established. And so those softwares are typically a lot more complex in the way that they're built. The functionality and configurations in those tools are a lot more robust than what a small up and coming real estate syndicator needs. And so the price point as well is a little bit too high for those companies to get on board if they're just starting out with their first or second deal.
And what would happen if you guys didn't get this funding? Could you grow this company organically without having to take the equity?
We would have to cut back our R&D team significantly, but we are working on continuing to make the platform easier to use so that we can make it a self sign-up platform.
But you did
so
that you ARR at the moment. You're profitable though, aren't you?
No, we're not.
When do you
we've invested.
When do you get reach break even?
We'll reach break even around 400 customers, which is around, when we get over $1 million in ARR.
Okay, cool.
Jake, I might have missed this in your presentation, but considering that you're starting off with sort of the early stage syndicators, in my experience, no one has ambitions to be early. They have ambitions to grow and have their own firm. Is your intent to grow with those customers that you bring on at inception, with their first few deals, or do you sort of drop off in terms of relevance or robustness of the platform when they get to a certain amount of capital, a certain number of deals, certain number of investors?
Yeah, exactly. That's a great question. Exactly why we can't peel off our R&D team. we're working with these early stage guys when they get their first deal under contract or they've done a couple of deals and making the price point palatable, and then they're growing with us. So we've had customers go from paying us $3,000 a year to paying us $20,000 a year, and growing from $10 million in equity under management to hundreds of millions of dollars in equity under management. What it demands of Groundbreaker is that we have to continue to make the tools more robust and continue to integrate with their evolving technology stack that they're going to build around them as they grow and get more sophisticated.
Thanks.
Great. Yeah, that'll conclude our questions. Thank you so much, Jake. Great presentation. And then we'll move on to our last company, of course, not least, which is Porchlight Health. Steve, if you can come on up.
All right.
All right, Steve, whenever you're ready. I believe you said you don't have slides, so whenever you're
Actually,
ready.
do. Let me.
Oh, you do. Okay, cool.
quick slide.
Great. So whenever you're ready, just go ahead.
All right, my name is Steve Peterson, and I'm the CEO and founder of a company called Porchlight Health. We're looking for a second seed round right now to expand from community-based organizations where we are today into the healthcare space. Second-time founder. I've been an executive at all sorts of companies all across the world, from the United States to overseas. And my first exit was in senior healthcare space. So Porchlight Health is a company that brings health home. That we actually solve the underlying communication problem that's really at the heart of the current senior health and healthcare crisis. So right now, the biggest problem Medicare is facing is that there's a huge growth in seniors. 10,000 people a day turn 65. It's the fastest growing demographic in the United States. Spending is also 3 to 5 times more than any other senior, or excuse me, any other working age adult. And all of these folks are in a single payer system called Medicare. Right now, Medicare spending is about $860 million a year, and that's going to double over the next 10 years. This is a problem that the industry is going to resolve by throttling down the payments and trying to find, and they're very financially motivated to find new ways to get in and solve this problem. But the biggest problem that they have to overcome right now is that seniors are hard to digitally engage. So a third of seniors today are able to in some way manage some version of technology, but they're managing complexity that ultimately creates problems and isolation. The other 2/3 are the ones that are disconnected by technology. And that disconnection comes in the, has you know, social and financial impacts, but it also impacts the family, it impacts community-based organizations, healthcare organizations, and ultimately severe limitations on the payer system. The solution is that we help seniors overcome the technology isolation that they have today. We give them a clean, simple platform to interact with the providers. And then the benefit on the provider side is that we're creating new efficient ways to break down those walls, you know, do more data integration, and help them provide the right care at the right time. Important to note inside this is that as each of these individual providers, whether they're healthcare, community-based, they are all independently working against each other, basically vying for the time and attention of seniors. So how do we solve the problem? The way to solve the problem is actually you bring everybody onto one platform. It starts with seniors. You have to understand the unique challenges that isolate seniors from technology. The only way you solve that is you provide in-person resources. And I'm going to just repeat that piece. The only way that you solve this problem is you provide in-person resources. You also have to provide and overcome the technology challenges that they have of ownership and access. And they have to give them a clean place and a reason to interact. Porchlight does that through creating a way for them to interact with their family members. That gives them a daily reason to check in. That creates an opportunity for us to leverage a platform approach where we're gathering data and we're starting to analyze that data to leverage artificial intelligence to then efficiently bring in and inform healthcare providers. So the key in looking at this slide right here is this is what we do. This is how we do it, right? It's all about understanding and addressing the engagement needs. Yeah, 1 minute. All right. I'm going to jump through a couple things. It shouldn't come as a surprise to anybody. Big market, right? As far as market validation, what we consider our biggest competitor is a company that called Papa Pals or Papa Health, and they have a $1.4 billion valuation. What we're looking for is we have a B2B subscription model, post-acute healthcare, home care and hospice is our market entry point. There's some real interesting dynamics around that industry, but again, I know it well. We have a growing pipeline of customers that we're building out right now. I'll jump through the KPIs, good looking people. Basically ask is we're looking for $2 million to help us do our first market entry launch into home care and hospice, a space we know well. And through that, that gives us positioning for a Series A in 12 to 18 months to go pursue a larger round. And this is going to be a multi-round event.
Great. Yeah, and we'll cap you there and open it up for questions. So Ben and Dan, whenever you're ready, either one of you can start.
So this is a tough problem you're dealing with. I know because I've been involved with a company doing exactly this over 10 years ago that failed. Very similar in that you had all the people on the ecosystem, the whole family involved in this. So in the social network. So I guess, yeah, tell me about the competitors and how you can get, and the experience that you're providing for a bit, such that it really works for everyone.
Yeah, so it starts by meeting the seniors where they're at in their home. And so what we've done right now, we have 2 paying customers. We provide an assessment to understand what their needs are in the home. We overcome those, whether it's technology or in-person support. And what we've seen is we have over 100 interactions a month of our managed users. And those are interactions with their family members and with the other healthcare providers that they have. So we've been able to prove that we can go into a home and support a senior, whether they're on hospice, non-responsive, or whether they're somebody that is technically savvy enough to be able to have an experience on their own.
Dan, anything?
Steve, how do you deal with data privacy and kind of all the challenges around health information?
Yeah, so we have a HIPAA compliant platform, end-to-end encryption. We have business associate agreements with our providers, so we actually leverage their privacy, personal health information, whatever their standards are. We are not a healthcare provider; we're a communication hub, and so it's through our end user licensing agreements and our business associate agreements. And also the security that we have on the platform and on the devices that we provide as well.
Got it. Thank you. And I think you're probably too early to think about CAC, and hopefully you have some LTV assumptions. But in terms of your go-to-market strategy at this point, what is, and it looks like you have a couple of paid customers, you have a pipeline. What does an ideal customer look like to you at this point, and how do you find them?
Yeah, an ideal customer would be somebody like Entrust Health. They are formerly in Encompass Home Healthcare. That's the company that I actually sold my company to. They're a $1.6 billion publicly traded company that has 250 sites across the United States. And what's interesting about them, they're like the 6th largest home care provider. They're moving into hospice. They're very technology savvy. And we're in conversations with them right now. They're doing technology due diligence on us. They're our ideal customer because they get it. They're moving forward. And as the rest of the industry is going to be really challenged as Medicare Advantage starts to grow, through relationships like Porchlight, they're going to have the tools to be able to bring virtual care into their daily operation and reduce costs by up to 25%.
Great. Yeah, that'll conclude the questions, but thank you so much, Steve, for that presentation. At this point, we have a couple more minutes here. So if you guys had any other questions for any of our startups, our founders can put their videos on now if they'd like. If you all had any more questions, now would be the time to ask. I know that some of these were a while back, but if you had anything written that you wanted to get to, feel free to ask.
So I had a quick question for Ben. This is Steve Peterschmidt. Do you guys actively invest in senior healthcare or just larger healthcare in general?
We have invested in sort of like digital and tech-enabled health in the past. It's not a main focus area of ours. We're in a couple early stage funds that are kind of more focused on those areas, and I'd be happy to make some connections for you.
Yeah, that'd be great. We're actually looking at talking to somebody right now that would close this at $5 million for us. But what we're looking for is just to start teeing up relationships for Series A and beyond.
Yep.
What's the profile of the investor you're looking for?
I would look for somebody that understands the senior healthcare space because there's an urgency that I struggle to present in the documents. And Medicare Advantage in the United States is growing, and it's really the only mechanism to put cost controls in place. They just don't have a way of understanding and managing that cost up front. Today, it's through the providers, which is sort of the tail wagging the dog.
And just as we go, just one more question from me, really, as a follow-on, really, in terms of. Given most, you're not your ideal customer, you answered very well. But given we never usually get our ideal customers. How are you going to try and acquire most of your other customers in terms of, I'm thinking like channel partners you're going to work with? Have you got any MOUs, service level agreements? How's that all? Have you got that in place, or that sales team in hand? Because you don't want to be doing all that in house, I'm assuming, or do you?
So you're correct. We don't want to do all this in-house. Those arrangements aren't in place today. Where we're starting with is it's sort of like whoever has the customers or whoever has the patients are going to be the one that start to dictate what happens in the marketplace. And so our strategy is really to go after that 40% of the population that's already receiving some sort of in-home healthcare, and then get them onto our platform. And through that, it starts to create gravity, basically. And the other providers are now saying, well, hey, I can be a part of that network and start to realize some of that efficiency. And that can be anybody from like a SureScripts or a company that writes prescriptions to large healthcare systems who now have access to a senior in their home, through an AI-driven experience.
And you've got 5 minutes. Those kind of things never come through so well because there's a lot of thought you're giving behind it. It's good to see you have given it thought. So try and bring that in, that you've really thought this through, that you've got a strategy in place, and because now it comes through in this Q&A, and it comes across well.
Yeah, no, I appreciate that. And it's just hard to talk about sort of the market entry point and the value of that today versus the multi-sided platform concept that really sits at the heart of what we do. Like, we provide access to seniors, we provide adoption and engagement, and everybody that's a provider benefits from that. Anyway, longer story there.
Great. Yeah. Did anybody else have a question before we close it out? Either our investors or our founders?
Yeah, I have a question for either Ben or Dan. How should I determine with my SaaS company and the trajectory that we're on, which kind of investors I should target for this round?
Happy to chat to you about that, Jack, because it's probably a bigger question than we've probably got time in the two minutes really at the end of the day.
Okay.
Yeah, I like what you're doing with the vision, I think, and I think but I think needs a bigger discussion, I think.
Okay, fantastic. I'll connect with you both on LinkedIn if that's okay.
Yeah, and we're happy to provide connections as well afterward, where there's interest or where anybody wants to connect further. With that, I'm going to go ahead and close it out. If you guys do have more questions, please feel free to reach out through me. I believe everybody on stage has my email, so happy to talk about next steps afterward. I want to thank all of our amazing founders and companies and our investors on the panel for joining us. It's a great event, and I really appreciate you guys. Anybody in the audience, follow us on 10capital.group to see more of our events. We have things like this happening all the time, so really happy to have you guys as well.